FHA loans are one of the most popular loan programs for first-time homebuyers. But did you know that you don't actually have to be a first-time homebuyer to use an FHA loan? In this video, I'm going to explain what FHA loans are, how to qualify for them, explain their mortgage insurance, and give you some tips and tricks to make it best work for you. My name is Jordan. I'm a licensed mortgage advisor. Let's get into it. So what is the FHA? The Federal Housing Administration, or FHA, is part of the U.S. Department of Housing and Urban Development. For an FHA loan, the FHA insures the loan, meaning that if someone stops making their mortgage payments, the FHA will actually pay the lender the balance that's left on the loan. With this insurance, lenders are more likely to be comfortable lending to people with lower credit scores and lower down payments. With some of the looser requirements because it's insured by the FHA, here's what they look like. If you have a 580 credit score or above, you can get into an FHA loan with a 3.5% down payment. If you have a credit score of 500 and above, you can actually get an FHA loan with at least a 10% down payment. Finally, the debt to income ratio for FHA loans is 55%. I actually just posted another video explaining DTI much more in depth, so feel free to check that out. But just an example here, if you were making $7,000 a month, that 55%, so your mortgage payment and other debt payments, would need to be less than $3,850 a month. Some of the restrictions that FHA loans do have is that it's only for a primary residence, meaning that you're buying the house because you intend to live in it. Also, there's maximum loan amounts for FHA loans. These vary by county, and they also vary by the property type. So it's different for buying a single family home or buying a 2-unit home. A 2-unit would be if you're buying a duplex and you're planning on living in one unit of the house and renting out the other. Here's some examples here for Maricopa County, Arizona for their 1-unit and 2-unit properties, but you can find your specific county on the HUD website. I'm going to link that in the description below. And finally, FHA loans make sure that the house is safe, sound, and secure. So it has to be approved by the FHA first. They do this in their appraisal process, and they really just want to make sure that the house is safe to live in, there's no major damage, and it's going to continue to be safe to live in. One of the hot topics that people talk about with FHA loans is their mortgage insurance. So for FHA loans, you pay a mortgage insurance premium, and that's paid in two different ways. The first one being an upfront mortgage insurance premium. This is paid at the beginning of the loan, either as a closing cost or it can be financed into your loan amount. For this upfront mortgage insurance premium, it's 1.75% of the loan amount. The other is the annual mortgage insurance premium. The amount for this depends on how much you put of your down payment, your loan amount, and your loan term. So if you choose a 15-year or a 30-year loan. But keep in mind here, if you have more than a 10% down payment, that mortgage insurance premium is only paid for the first 11 years of the loan. If you have less than a 10% down payment, then you'll be paying that mortgage insurance premium for the life of the loan. So either until you pay off the house completely or until you refinance into a different loan product. To give an example here, I used a $400,000 purchase price. I did a 3.5% down payment, which is the minimum for FHA, and that leaves us with a loan amount of $386,000. So the upfront mortgage insurance premium, that 1.75%, comes out to $6,755. Again, that can be paid upfront or financed into the loan. The annual mortgage insurance premium, again, this varies based on your down payment and length of the loan, but typically I see 0.55% of the loan amount. That's divided over 12 months. And for this example, would be a payment of about $177 a month. So finally, just some things to consider if you're deciding on an FHA loan is the right option for you. They're great options for people with lower credit scores and lower down payments. This makes them really popular with first-time homebuyers. But again, you don't have to be a first-time homebuyer to use an FHA loan. Regardless of if you have that lower credit score or lower down payment, the interest rate is lower on an FHA loan than a conventional loan right now. So your monthly payment might be lower with an FHA compared to conventional. And the last thing I want you to keep in mind that it's usually not a forever loan. It's one that you want to refinance to a conventional loan later on so you can get that mortgage insurance taken off. Overall, FHA loans are great loan programs that do help a lot of people buy homes. They may or may not be the right loan program for you or the property that you're looking to buy, but hopefully now you understand them a little bit better. Check out some of these other videos, and I'll see you in the next one.